What is going on, everyone? Welcome to the Solid Report After Hours, where I'm going to be discussing a few things that happened to earnings today. The first thing that I want to go over is just the high-level view of how earnings actually acted today. We had more than a few companies report. We have Mercado Libre report after hours today. Realty reported today. Tempest AI, Zeta, Navitas, Transmedics, CAVA, AXON. HPQ reported today. First Solar, Lucid, Workday, and Accelera, all reporting on the same day after hours on Tuesday, February 24, around 1 p.m. and so on. Sorry, 4 p.m. and so on, because I am on Western time zone. So anyways, what we're looking at today over here, let me just go ahead and bring up the image here because it is after hours here. So we have Mercado Libre report earnings. They're down about 4.68% after hours, and they were actually up initially about 1%, about 6% after hours. Realty is down about 27 basis points. You're not really going to see too much of a move for real estate investment trust, so I'll really just leave that alone. I don't think people who are even invested in that don't really care about the after hours action anyway. Tempest AI reported, and they were down 4.23%. Zeta reported, they were like down about 4%. They were up about 4%, 5%, and then now they're up only about 2.41%. After hours action is probably a little bit different than that, so we'll take a look at that one in a minute. Navitas reported earnings. They're actually down for a little bit, and they're up like around 6%, so they basically closed out flat after hours. Transmedics closed after hours around 6.72% up. CAVA closed 9% up. AVA closed 16% up. This is actually a very interesting one. I want to dig into that earnings with you just for a minute soon. HPQ is down 6%. First Solar is down 13%. Lucid 5% down. Workday down 10%. I'll give my commentary on that one. Accelera up to 9%. They're actually up as much as 20% after us at a certain point. So kind of going through the market right now and just give a little bit of my thoughts on where things are going. If I bring up the chart over here, right here, we have the Qs, all right? So on a daily basis, you had a pretty good day. You had the Qs up basically 1%, SPYs up 73 basis points, IWM is up about 1%. And even on top of that, if I go to my big list over here, IGV closed up about 2%, while SOX or semiconductors closed up about 1.5%. So you had that outperformance of semiconductors versus, underperformance of semiconductors versus software, which software had a pretty good day today. Actually, a lot of things bounced today. You had Adobe was up about 4%. Trash Stock AI was up about 3.5%. CRM, Salesforce up about 4%. The leaders really of this entire list was DigitalOcean, one of the leaders today. They reported earnings this morning, and they think they were projecting about 40% growth next quarter, which is pretty wild when you think about it. GitLab up 4%. IoT or Samsara is up about 5%. Klaviyo is up 5%. Monday.com is up 6%. Paycom's up 4%. You have like a lot of 4% plus moves over here. If I move down to the data sector, did not perform as well, and Palantir was actually down on the day, which is very surprising to see. CrowdStrike basically flattened down on the day. Fortinet down. Octo is up about 2.5%. Rubrik had a pretty good day today. It was up about 8%. I'll provide a little bit of thoughts about that one. Sentinel went up about 3%, and Zscaler up about 4%. Oh, wow. Zscaler actually went below 150. That would actually bring it lower. Wow, it hasn't hit those levels since 2023. That's pretty wild just to even think about. So what is the market doing today? Are we actually hitting a bottom, right? I would say right now we're probably hitting a temporary bottom in the market. I do think there's probably going to be more pain to the downside. We did have a little bit of relief rally today, which is good to see because everything was basically straight down for a long time when it came to your software stocks. I mean, you have IGV basically down 30 to 40%. In the last few months alone, and you have other software stocks down about 50, 60%. So it's been a very volatile year so far. So when that happens, you usually get a little bit of a relief bounce. Now, let's not confuse a relief bounce with basically the bottom. We don't know if this is actually the bottom, and that's actually what makes bottoms because people don't know if it's actually a bottom or not. The thing is that nothing's really changed in terms of the macro in the last couple of months. You had a few things that did change, but on the surface, I'm sorry, for the micro, nothing's really changed for these companies. It's more of the macro and the sentiment towards software stocks. Historically, a lot of these software stocks have traded at pretty excessive valuations. And even after its 30, 40% pullback, some of them are still pretty expensive. If I take CrowdStrike, for example, its all-time high was around $550. Today, it's trading around $350. And still, the stock is expensive, trading around enterprise value and sales on a forward basis of about 15 times. Historically, it's traded more than that. But if you go all the way back to 2023 and 2022, it was much cheaper. But at the time, remember, the S&P 500 was trading less than 20 times on a forward earnings basis. So things have gotten a little bit elevated, and the S&P is still trading around 22 to 23 times forward earnings. So the question really comes, are we going to buy the dip on software stocks because the S&P is going to continue making all-time highs? Or is the S&P 500 going to eventually catch to the downside for a lot of these stocks that were sold off? So what we're going to do in today, we're going to take a look at some of the earnings that did report today, and I'll give my thoughts as to where I think the market is going. Let me go ahead and pull up these earnings from Mr. Bradley's Stock Market Nerds. So we have the Mercado Libre earnings over here, and I'm just going to bring this to a separate window so that way it's a lot easier to see. All right, so over here we have Mercado Libre basically beat the top line. They did miss the bottom line slightly, only by 41 cents. And I don't believe they provided too much guidance for next quarter, which is probably, it's pretty common with Mercado Libre to do this sort of thing. What you're really betting on with this company is betting on the emerging markets rise, as well as its demand that it sees quarter over quarter, year over year, and its massive growth engine as far as the Latin American or South American sector. Revenue came in this quarter around 8.76 billion, which is a 45% growth year over year and 18% quarter over quarter. However, there is a little bit of seasonality here, so let's not get too excited about that number right there. But they have a 2-year CAGR of growing above 40% year over year, which is still really good. Gross merchandise value, which is basically how much they are transacting in their entire system, is grew about 37% year over year. Now, their revenue outpaced their GMV, which means that they are inflecting further into profitability. If we go into their gross margins over here, gross margins were 43.2%. Last quarter, it was a little bit higher, but if you go back to a year ago, they were actually a bit higher than this. However, their operating income is still around 10%, which did expand on a quarter over quarter basis. But last year, it was actually higher than that, around 13.5%. And so is the net income. So why was this company down? Well, the gross profit margins actually did a slight beat. But considering this environment, the market isn't too forgiving when it comes to how well you're doing. You have to really beat the top line. And Mercado Libre is not exactly the cheapest stock, but it really is the Amazon of South America. So you're not really going to get a better deal with that one. So there was a little bit of FX impact, which did give it a little bit of a boost here, 47% year over year in terms of FX neutral growth versus 35% quarter over quarter, which is still really good. And they have about $7 billion in cash in the balance sheet, but they have more debt in the balance sheet than they do in terms of cash and cash equivalents. Now, the stock was up about 6% after hours initially, but then they pulled back all the way down about 6% after hours. But still, I would argue that if you want to bet in Latin America in terms of the emerging markets growth, this is probably one of your better sectors to be in. If you want to be in something safer, you could probably be more in the banking sector, Latin America, especially the legacy banking sector. Nubank has reverted back to the valuation it does deserve, but earlier last year, it was trading around $10 when I was basically pounding the table on that one, and that was a very good trade to be in. So let's move on to the next stock that we had on our list. We had Realty was down about 27 basis points after hours, so that's not really that important. Tempest AI did report earnings. They're down about 4.23% after hours. So let me go ahead and bring up the Tempest AI earnings. So we have Tempest AI here. They traded about a $10 billion market cap, which is pretty excessive whenever you think this company. However, just maybe 6 months ago, it was trading at double that market cap, around $20 billion, trading above $100 a share. And that was around the time when I exited my position because the valuation got a little egregious. So 41 times price to free cash flow is pretty demanding, but they are not exactly in a profitability perspective. So you need to have a long-term view on this company if you really want it to come back. Gross profit margins around 61%, EBITDA margins is minus 15.4%, and free cash flow margins are minus 22%. So you are not getting a profitable company that's growing at a tremendous pace. You are getting a non-profitable company that is in high growth mode. So they need to grow their way into profitability at this point of their stage in terms of a business, right? So there's a lot of these companies that have existed out here. The problem is that the market doesn't give a premium onto these companies as much as it used to. So it's not just Tempest AI that really has gotten sold off pretty tremendously. It's also EOS Energy as well as Navitas and a few other high growth companies that no longer have that massive AI tailwind to give it the boost on its premium or valuation that it used to get just a few months ago. So I would say that this is probably a victim of that entire case. And there's going to be a lot more likely in the next couple of months who have not already been hit. Let's move on to Zeta. I'm actually going to do Zeta in a separate video, so I will not move on to that one, but they close the day up about 13.3%, and they're about 2.5% after hours, almost as much as 6% after hours. And I'll get a little bit onto that commentary when I do a separate video on that one. Navitas basically closed flat at the end of the day, so let me go ahead and bring up their earnings. So Navitas trades at about a $2 billion valuation. And to be honest, this company is a big partner, not really a big partner. To be honest, this company is a partner of NVIDIA, and they do have that AI tailwind, and they are in the silicon carbide space of semiconductors, which provides ample energy and power throughput throughout all of the components in a server. Now, the bullishness with this was really a tailwind for it when at the time, a lot of high growth stocks were also gaining a bit up, just like Tempest AI. But I don't think it really matters how they reported their earnings. Everyone knew that they were not going to be profitable this quarter. Everyone knew that on a gross margin basis that their gross margins are pretty low. And I would argue that this was a trade more than anything. The company's trading down here at about $8. It was as much as $14 just a few months ago, but now it's back here at $8. And I would say if the market continues with the current theme that it's on, where it's not giving the premium valuation anymore, this company is probably headed to the mid to low single digits. That might not want to be what you want to hear, considering the stock was up almost every single day just a few months ago, but it's no longer the case anymore. With minus 83% free cash flow margins and EBITDA margins of minus 131%, you kind of need to have a long-term story with this one, and you really need the market to come back and be in favor and massive risk on again. But we are not necessarily there, especially when it comes to the tech sector and especially when it comes to the high growth sector. The next stock we have over here is TMDX or Transmedics, which they actually had a very good quarter. So let me go ahead and post that over here real quick. I posted this earlier on my Twitter, so go ahead and follow me on Twitter when you get a chance. But Transmedics came in for Q4 of 2025, and they were up about 6.5% after hours, dominating basically the earnings that they had. This company was trading at about $50 to $60 not more than a year ago, and now it's here about 3 times that price. So congratulations for anyone who was buying the dip in this one. Revenue came in at $160 million, so that was a beat, and they grew 32% year over year. EPS came in at $2.62, and they beat the estimates. I would say that this estimate is probably due to a write-off that they did. I think they actually did have a tax benefit. They did have a tax benefit, which did bring them up to a massive beat on the bottom line. Gross margins are about 58%. Last year, they were 59%. Net income came in at $105.4 million. And that includes, of course, the one-time tax benefit, which is the reason why you saw that massive beat in the bottom line. Full year revenue grew 37% year over year at a $605 million. And US OCS cases grew 38% to 5,100 cases. Cash on the balance sheet is about $500 million, which is pretty good for a company like this, considering that the company is, let's see over here, it is a 4.7, it's about a $5 billion company. So it has 10% of its market cap in cash. That's really good to see. Next year, they're going to be coming in at $727 to $757 million. That is a 20 to 25% growth year over year. Again, the stock is up 6.5% after hours. The next stock that came in, they were up pretty considerably after hours, was CAVA. All right, so CAVA came in the quarter at $275 million year over year, expanding growth by 20.9% year over year. Stores, 439 stores across the entire country, which means that they are expanding pretty quickly still. AUV came in at $2.934 million, which grew 2.4% year over year. And we have an EBITDA margin of 9.4%, which did contract year over year by 160 basis points, so 1.6%. They did decrease or contract profitability to 1.8% this quarter, and that was likely due to something to do with taxes or whatever investments that did bring that down. So the annual guidance that they did give was 4% same-store sales growth and that beat the growth estimates by 1.25. So their guide was really good for next year. They are looking forward toward having a good 2026, and that's probably the reason why the stock was up about 9% after. So congratulations to CAVA shareholders over there. The next stock that reported was AXON Technologies. All right, so AXON was up about 16.5% after hours. Revenue came in at $797 million versus $754 million, expecting grew 39% year over year and beating the bottom line on an adjusted EBITDA basis at $1.21. Their ARR came in at $1.8 billion, growing at 34% year over year. So you can expect this company to still grow at 30% plus next year. Net revenue retention is still at 122%, which means that the customers are not only staying from 12 months ago, but they're also paying 22% more, which is really good to see. On an adjusted EBITDA basis, they came in at $200 million, growing 53% year over year with adjusted EBITDA margins at 25%. Next quarter, they came in with revenue guidance around 720 to 730 million while contracting revenue. Their EBITDA margins are still staying around the mid 20%, which is 23%. But their full year came in at a strong 25% year over year growth, expecting around $3.4 billion on the upper end of that range. Adjusted EBITDA margins for next year is going to be 24%. So still a very profitable company on an adjusted basis and still a very strong moat as they basically rule body cams and all of its technology on the back end and as well as the cloud. We had a few more earnings that occurred after us, but nothing really want to dig too much into. Maybe I'll do a separate video on Workday. We'll see if I have time. But like I said, the rest of them were red pretty much. And Accelera was up about 20%. And now it closed around 9% in the after hours action before the overnight markets. So just to kind of give my thoughts on this earnings so far, we're just about done with earnings season for most of the mega cap stocks out there. We're really heading toward the software part of earnings as well as the small and mid caps in the markets, right? But I would say the majority of stocks did report. Of course, we do have NVDA reporting tomorrow, which we're going to see a major market mover, and a lot of other stocks in the market move as well after those earnings. And if they do really good, it's very likely the market's going to be up. The thing is that last quarter, NVIDIA did report earnings, and they had blowout earnings, and they opened up about 5 to 6%. First $5 trillion company in the market. And then they end up closing down around 3 to 4%. So that's almost a 10% swing from peak to trough, which is about $500 billion from peak to trough, which is pretty crazy. And the S&P 500 itself opened up about 1.5% last quarter and then closed down 1.5%. So not really coming into this earnings with any expectation whatsoever, and certainly not playing any options to the upside or the downside. However, just like every other quarter, I do think this is going to be an option selling event more than anything. So do so at your own risk. This is not financial advice, of course, and this is purely for entertainment. I thank you all for watching this video. Go ahead and like and subscribe to this video and subscribe to the channel. Leave a comment below if you have any questions or if you'd like to make any comments or anything. And follow me at x.com/Sam_Badawi, where you can check out all of my other content that I share freely throughout the entire day, or you can check the other channels I have over here. All right, so go ahead and do that and enjoy the rest of your evening, guys. Take care.